Hello guys, you're most welcome to my pick FX, and I'm going to introduce you to the first class, and that's the beginner class, the beginner FX class. And what we're going to talk about and what we're going to look is beginner class. I want to start with introduction. What is Forex? And after that, we're going to go to what is traded in Forex. Then we are going to move to buying and selling currency pairs, Forex market size and liquidity, and how to trade Forex. And for this, as we know that FX is a global financial market that allows one to trade currencies. If you think one currency will be stronger versus the other and you end up correct, predicting it correct, then you can make a profit. Once upon a time, before the global pandemic happened, people could actually get on airplanes and travel internationally. If you have ever traveled to another country, you usually had to find a currency exchange booth at the airport and and then exchanging the money you have in your wallet into the currency of the country that you're visiting. You go to the counter and what you do is you notice a screen displaying different exchange rates for different currencies. And some of us don't know what an exchange rate is. An exchange rate is a relative price of two currencies from two different countries. Like for example, I'll put an example here of USD and Japanese yen. This is the symbol of United States dollar and the Japanese yen. So what we mean by the exchange rate is a relative price of two currencies for that two countries. You get me? So with an exchange both, this is what an exchange both looks like. Hope all of us know we have seen this kind of picture somewhere in front of our banks, in front of our forex bureau, and so forth. So this is where there is exchange currencies. It's called an exchange both. Okay, the foreign exchange market is usually known as the what? It's known as the FX. If we hear anyone talking about the FX is a short form of foreign exchange market. Or if you hear anyone talking about Forex, that person is talking about the foreign exchange market. The short form people just call it nowadays. People can call it the FX or the Forex market. And the FX market is the largest financial market in the world. And the FX market is a and it's the what decentralized market where the world's currencies change hands. Exchange rate change by the second. Exchange rates they change by the second, so that the market is constantly in flux. Only a tiny percentage of currency transactions happen in the real economy. Okay, with I want to dive in deeper. Only a tiny percentage of currency transactions happen in the real economy, involving international trade and tourism, like the airport example and example I gave of the exchange booth. All of you can remember. Instead, most of the currency transactions that occur in the global foreign exchange market are bought for speculative reasons. Currency traders, sometimes we call them the what? The currency speculators. They buy currencies hoping that they will be able to sell them at a higher price in the future. Let's say, for instance, you have United States dollar. Let's say you have United States dollar. Is what you have right now, United States dollar, and you're hoping that the currency or the value for the United States dollar is going to increase in the future. What you do is you buy what? You buy the US dollar. Let's say, for instance, you have right now at hand, you have the what? The Japanese yen. If right now at hand you have the Japanese yen, excuse me a bit. If right now at hand you have the Japanese yen and you're hoping for price of the United States dollar to increase in the nearby future, what you do right now is you buy the United States dollar currency with the Japanese yen. You use your Japanese yen to buy the United States dollar, hoping that the price will what increase in the nearby future. So by doing so, you will have done forex trading. So, and the same happens. Let me say you at hand right now, what you have at hand right now, it's Japanese yen, and in the nearby future, you're expecting that the Japanese yen, the value of the Japanese yen is going to decrease in the nearby future. What you do is you sell the Japanese yen because in the nearby future you hope that this Japanese yen, the value is going to decrease. What you do, you sell it right now. By doing these two scenarios, we have done what is called forex trading. Compared to the measly, let me say measly 200 billion per day volume of the New York exchange, the foreign exchange market looks absolutely big with about like 6.6 trillion. With about 6.6 trillion a day volume. So it's the largest financial market in the world. Let's take a moment to put this into perspective using what, like, let me say, fast wait a bit. Let's look into perspective. Let me put an example of a drawing. Let's say these. Let me put like two triangles. This is a triangle A, and this is a triangle B. So I'm drawing this to compare the New York stock exchange market and the forex market. So this is a New York what? The New York Stock Exchange. Is a New York Stock Exchange, and this one is FX market. So although the New York Stock Exchange seems to be like big, it's not comparable to the what? To the FX market, because this is the largest financial market in the world with about an estimation of about 6.6 trillion United States dollar. Uh, you hear about the NYSC. This is what I'm talking about. The New York Stock Exchange in the news every day, like on CNBC, the Bloomberg, or BBC. You even probably hear about it at your local gym. The NYSC is up to let me say like blah blah blah, up to date and so forth. When people talk about the market, they usually mean the stock market. So the New York Stock Exchange market sounds big. It's loud and it makes a lot of noise. But if actually compared to the forex market, it would look like this. The NYSE looks so small compared to the forex market. It doesn't stand a chance. It makes you wonder if the S in the stands for stock or for something like scrunny.